Welcome back to the Crypto News Today podcast. The market has been unsettled this week, with Bitcoin dipping under 110,000, Ethereum under pressure, and sentiment flipping from confident to cautious. In today's episode, we're going to step back and focus on three stories that matter most as we head into October. The first is Tether's extraordinary push to raise up to $20 billion at a valuation that could put the company close to $500 billion, cementing its role at the heart of crypto liquidity. The second is the UK's decision to reopen crypto to retail investors, a shift that could change how millions of people get exposure. And the third takes us far from trading floors into Nairobi's Kibera, Africa's largest slum, where Bitcoin is being used every day as survival finance. Together, these stories show us where crypto is heading, from Wall Street to London to the grassroots. But before we get into them, let's take a look at the top 10 coins and where they stand right now. Bitcoin is trading at around $109,500. It's been knocked back from the highs near 124,000 and sits on fragile support, with traders watching 107,000 as the key level to hold. Ethereum is just above 4,000, wobbling but clinging to that psychological line. Solana is circling 200, a battleground that could decide whether it leads altcoins higher or slips back into the pack. XRP is stuck under resistance at $2.79, a ceiling it has tried and failed to break several times. Cardano holds 77 cents, not moving much but still holding its ground. BNB trades at 965, stable compared to the rest. Dogecoin is 22 cents, drifting but still relevant. Avalanche sits at $28, Tron at 33 cents, and rounding out the top board we have Polygon, trading close to 71 cents. That's your snapshot of the majors, red across most of the board, but nothing we haven't seen before in these markets. Now let's move into the stories that really matter this week. First up, Tether. The company behind the world's largest stablecoin is in talks to raise as much as $20 billion in new capital. If it pulls this off, Tether's valuation would stand at roughly $500 billion, putting it alongside the biggest banks and payment firms on Earth. To put that in perspective, this is a company that issues digital dollars, backed by reserves, that started as a niche tool for crypto traders. Now it's on the verge of being valued like JP Chase or MasterCard. That's not just remarkable growth, it's a statement about where crypto has come in little more than a decade. What does this raise mean? Stablecoins are the plumbing of the crypto market. They are the rails that trading runs on, the liquidity pools that keep exchanges moving. Tether dominates that space, but it has always been controversial. Critics argue it hasn't been transparent enough about reserves. Supporters point to its resilience, its ability to survive every storm. A raise of this size would send a message that institutions believe Tether is here to stay, that it can not only defend its dominance, but expand it. And the expansion is real. Alongside the raise, Tether is reportedly working on a new US-facing stablecoin called USAT. If that project succeeds, it pushes Tether directly into the most regulated and competitive stablecoin market in the world. That would pit it against Circle's USDC, PayPal's PYUSD, and future entrants waiting in the wings. If Tether can win in the US, it cements its role globally. The implications go beyond Tether itself. More capital means deeper liquidity across exchanges. Deeper liquidity means smoother trading, lower costs, and more confidence for institutions thinking about entering the market. And if Tether reaches a $500 billion valuation, regulators will be forced to take notice. A company of that size can't be brushed aside. It will be treated as a systemically important player. That could mean tougher oversight, but it also means greater legitimacy. Tether's raise, if it happens, could be one of the defining events of the year. Our second story is from the UK, where regulators are quietly making a major shift. From October 8th, retail investors will once again be allowed to buy crypto ETNs, exchange-traded notes, on regulated stock markets. This may not sound dramatic, but it's huge for everyday investors. Back in 2020, the Financial Conduct Authority banned these products for retail, saying they were too risky. That forced millions of British investors to either stay out of crypto or to go offshore, often into less regulated spaces. Institutions could still buy ETNs, but retail couldn't. That ban is now being lifted. From next week, a retail investor in the UK will be able to buy a Bitcoin or Ethereum ETN through their brokerage account, just like they'd buy a stock or bond. They won't have to worry about wallets, keys, or unregulated exchanges. The products won't be covered by compensation schemes, so risk remains. But this is still a major step. It shows that regulators have shifted from trying to block access to trying to manage it. And that's the direction of travel globally. In the US, the SEC is streamlining ETF approvals, cutting the wait time from 270 days to 75. In Europe, banks are working on euro-denominated stablecoins under MiCA rules. The UK move fits this broader pattern. Access is widening. Regulated products are multiplying. The pipes for mainstream capital are being laid. The impact will be felt slowly but surely. UK investors are hungry for crypto exposure. Many have been buying through offshore platforms or using workarounds. Now they can do it directly, on regulated markets. That means more inflows, more legitimacy, and more pressure on other regulators to catch up. It's another sign that crypto is no longer on the fringe. It's moving into the mainstream of financial products. And then we come to our third story, which takes us far away from trading floors and regulatory debates. In Nairobi's Kibera, Africa's largest slum, Bitcoin is being used in a way that cuts right to the heart of its original vision. A group called Afribit Africa has been teaching residents how to use Bitcoin wallets on cheap smartphones. People there are using Bitcoin not to speculate, not to trade, but to live. Shopkeepers, garbage collectors, neighbors pooling savings, they're all transacting in Bitcoin because the alternatives don't work for them. Mobile money systems like M-Pesa are widespread in Kenya, but the fees are crippling for small transactions. Banks are out of reach for millions. For these communities, Bitcoin, even with its volatility and risks, is cheaper, faster, and more reliable. It lets people pay for bread, pay for water, pay for services in a way the old system doesn't. This is Bitcoin as survival finance. Not hodling, not leverage, but life. It's raw and imperfect. The volatility is real. Scams are a risk. There's no safety net. But it's happening. And it matters because it reminds us why this technology was created. Satoshi's white paper wasn't about ETFs or half-trillion valuations. It was about peer-to-peer electronic cash. In Kibera, that vision is alive. It may not grab headlines in the West, but it's real adoption in one of the toughest places on Earth. And it shows us that crypto isn't just about Wall Street or Canary Wharf. It's about giving people tools the old system never gave them. So when we think about where the market is heading into October, remember these three threads. Tether is building financial giants that rival banks. The UK is reopening regulated doors for retail investors. And in Africa, people are using Bitcoin because they need it, not because they want to speculate. From Wall Street to Nairobi, from Canary Wharf to Kibera, this is the spectrum of crypto in 2025. The market right now is shaky. Bitcoin under 110, Ethereum wobbling, altcoins red. Traders are nervous, but the structure isn't broken. It's resetting. Infrastructure is being built. Access is widening. Use cases are spreading. That's the bigger picture, and it's what matters most. That's where we'll leave it for today. Drop your thoughts in the comments, hit like, follow, and we will see you at the top.